Welcome back to Trading Hard Times and Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me for the first time Ralph Fitch. He is the exploration geologist. Well, he's actually the president and CEO of TriMetals Mining. It's a company that I have learned to know. It's a company that I have bought shares in, have recommended to my subscribers. Ralph has a very extensive history, background as a geologist of over 50 years of international exploration management and field experience, and he is one of the co-founders of South American Silver Corp, the company that's developed a major deposit in South America. And, he's had just a tremendous history over the years, worked for major companies like Chevron Minerals, and has been involved in South Africa, Australia, around the United States, different parts of, obviously, South America. So his experience as an exploration geologist and as a manager is very extensive, and really pleased to have him with us today. Thanks for joining me, Ralph.
No, it's a pleasure.
Yeah. Really a pleasure.
Yeah.
Go ahead.
No, I was just saying it's a pleasure, and of course, TriMetals Mining is the company name now, and we're listed on the Toronto Exchange under the symbol TMI, but in the US on the QX Exchange as TMIAF is the common shares, and if we get time we can also talk about the B shares, which are TMIBF, also on the QX.
Okay, let's hope we have some time for that. 135.7 million shares out. I saw earlier this morning in the U.S. markets, which is where I purchased my shares, they were at 23 cents, giving the company a market cap of around 29 million U.S. dollars. Ralph, let's jump right into your story. You have a very interesting, a number of different deposits, or a number of different a couple deposits at least where you have a resource, I should say. It's not a reserve yet, but it's a resource, and you've had a preliminary economic study carried out that was quite robust. Tell us about that.
Yeah, so we're in the category of exploration and mining company called the Explorers. So we're the guys who go out and find the gold that you have in your sort of gold jewelry. This is where it all starts. So we start with a geological idea, and then if we're successful, we develop what we call a resource, which is a number of ounces of gold in the ground. And we indeed have done that. And if you add up the various categories that there are, they're called measured and indicated, and then the less well-known are called inferred. If you add all that lot together, we've got about 903,000 ounces. So we're sort of well on the way to having enough ounces that we can start thinking about mining. But as I go through the story, you'll realize that we think we can find a lot more than this first million ounces. And in fact, publicly, with all the sort of legal caveats, we say that we think our property is permissive for the discovery of, say, 3 to 5 million ounces, which, of course, would be extremely valuable. So we've done that initial geological idea. We've done some of the basic exploration. We found close to our first million ounces, and we've done what is called this PEA. This is a Canadian category that when you file in Canada, these are one of the reports that you have to file for the public. And it's really maybe another term or looser term for it would be scoping study. It's the first engineering study to show whether what you've discovered is likely to be commercial. And there's lots more engineering you have to do before you get to the mine, but it's a very useful document to help investors realize that what the work that's being done is actually likely to end up with something that makes a profit. And our PEA, as it's called, showed a project 15,000 tons a day. The net present value of the project was 137 million pre-tax, 92 million after tax, with an internal rate of return, IRR, of 49.9%. Very low capex, 55 million, and that's because this property is located on the border of Nevada and Utah, and these are areas where the so-called heap leach technology was developed actually in the 60s, and this is one of the cheapest ways of recovering gold. And so the development of a mine of this type is much cheaper than, say, one that requires a mill. So our initial capex is only $55 million, and our cash operating costs, so the cost to produce an ounce of gold, is $669 per ounce, according to our PEA study. Mm-hmm. Now, what I really need to get across, Jay, is even though we've got this very robust study, we've only drilled actually 10% of what we think the gold target is. Mm-hmm. And we've got a lot of evidence that we've only drilled 10%. For instance, there's 26 areas in this 74 square kilometer property that the rock's actually outcropping or sticking out of the ground, and you can get assays of over 1 gram per ton in all of those areas. And in some you can get 10, 20, even 30 grams per ton in outcrop. This is quite remarkable in that Nevada, of course, is a very well-known area for gold, and people have been exploring there for a long time. But in this particular area, for some reason, which is not really clear, it was not explored in any detail, and these minerals are still available at the surface. So we think we've got close to 1 million ounces. We've only drilled 10%, and as we continue drilling the other 90%, we think we've got a very good chance of ending up with something quite substantial and quite important from an investor's point of view. Okay. This year we are actually now starting our trenching program on another target. So we've got 2 big targets where our resource has been developed. One in Nevada called Grey Eagle, and one called Jumbo in Utah. We're now starting on another one called the Thor, which is actually on the Nevada side of the border, but it's much higher grade. These are some high grade veins of 4 to 30 grams in outcrop. And this year we're going to start off by trenching and then drill in that area to see if we can put together a higher grade resource to act as what you might call a sort of starter pit. The first year of operations would be at this higher grade. And if we're successful in doing that, it has a very positive impact on the economics.
Yeah. Well, your economics look pretty strong as it is, Ralph. And I guess, if we're looking at $669 cash cost, you got a $1,200, $1,300, somewhere in that range gold price. That looks pretty robust as it is, so could be even healthier, I guess, if you can increase the average grade. What is your average grade there on that PEA?
In the PEA, the resource grade is 0.6 grams, what we call gold equivalent. That's you add the gold and the silver, you sort of make that a smaller number because silver is not so valuable as gold, and then combine the two together, you end up with 0.6. In actual metal values, that's about half a gram of gold and about 10 grams of silver. Well, they're about per ton.
Mm-hmm. Per ton. Yeah. So, Ralph, how far apart are these different occurrences that you've seen? I mean, is it feasible that you might have 1 or 2 heap leaches, or how do you see this? Are they close together, these different deposits?
Well, the 2 that we've drilled enough to create a resource, in other words, develop these sort of ounces in the ground, they're about 5 kilometers apart. And in the PEA, this initial engineering study, we actually mined both of them. So we had skid-mounted crushers and things like that. So we mine one out and then drag it to the other site and crush the other ore for the heap leaching.
Okay, Ralph, go ahead.
Yeah, but I think the important thing there is in both of those areas, the one in Nevada and in Utah, we still have not done enough drilling to know how big those areas are. Uh-huh. And it's quite likely that we'll end up with 2 separate mines.
All right. Now, your management team, yourself, and some of your other management members, are you equipped, Ralph, to take this into production yourselves, or is this something that you might try to build 3 to 5 million ounces and attract a major that would come in and pay you a sweet price for it?
Well, I think we have Randy Moore, who's our EVP of Exploration in North America, who brought the project to us, this Gold Springs project. And he's a very competent soul, and we have Felipe Malbran, another very competent exploration geologist in Chile, who's looking after our other major project called Escalones, which is a copper-gold porphyry. But our entire focus at the moment is really this Gold Springs in North America. In earlier years, when we had the Malcucota project in Bolivia, which was heading towards 400 million ounces of silver, we had developed a complete mining team. But when that was expropriated by Bolivia, we had to let those people go. So we're quite used to putting the team together. Mm-hmm. But whether we would do that and go into production or end up being bought out, that is one of the things that happens to these exploration companies when they're successful. Often people try and buy them, and since it's a public market, if they offer a high enough price, then the company is sold.
Sure.
We think our next sort of primary marker in the sand, as it were, is we'd like to get past a couple of million ounces and then make the decision if we move towards production ourselves or continue to build the resource. But both ways, it has the potential to significantly increase our present sort of 40 million market cap.
Well, indeed it has. Let me ask you, Ralph, though, mining, you've been around as long as longer, I think a little bit than I. We know how risky this business is. Aside from the price of gold, what would you consider to be, what factors could raise their ugly head that would make this, what sort of fatal flaws might crop up? Can you think of any?
Well, I mean, absolutely. The exploration business is extremely risky. It's very difficult to find a mine. We've already got the sort of 903,000 ounces, so we're very close to having enough to start a mine, even if we don't find any more. So that risk is not that large. Environmental risks do not appear to be significant at this time. There's a few arrowheads and things around that we have to mitigate, but no one has found any significant issues, and we have plan of operations both in Utah and in Nevada for all the exploration effort. So I think it's relatively low risk, and of course I buy more shares every year because I'm a big believer in this.
Well, and you, of course, you have the fate in your own hands, so to speak. But let me ask you, with a minute left, talk to us briefly about the B shares you mentioned.
Yeah, so I mentioned the Malcucota project in Bolivia that got expropriated. The B shares get 85% of any cash award after costs, which are likely to be around a third. And that's all they get. So they're not part of Gold Springs or anything else, but it's looking at any cash award that we get out of the expropriation hearings, international arbitration that we're going through, and that starts July the 11th.
All right, and the shares are trading. You can buy them on the exchange?
Yes, indeed. You can buy both the A shares, which is if you're interested in the gold exploration, or the B shares if you're interested in a legal issue.
All right. Well, it's certainly, I think, a very exciting story you have going, Ralph, and you've got an exploration program going now. Do we hear some results soon from those?
I would say mid-July. We'll start getting the first trenching results.
All right. Well, we're going to talk to you again sometime, I think, in the next month or two, so maybe you can give us an update on that and what it might mean in terms of...
Yeah, I think by that time we'll be drilling, and so we'll have a lot more exciting news, I believe.
And people can keep up with your story, your website. What is that? TriMetalsMining.com, and there you'll have a presentation, financials, and of course you can always contact me through the website if you want more information. I'd gladly talk to you. All right, another way people can subscribe to my newsletter, and I'll pass along information as well. It's just a shameless plug on my part for my own work. Ralph, thank you so much for being with us today, and we'll look forward to talking to you again in the near future.
Thank you very much, Jay, and good day to you too.